Hey everybody, it's Adrian Zdunczyk, CMT, Charter Market Technician, Birb, and we continue our journey throughout the educational series on the RWAs, the hidden revolution, because it seems that there's a lot of interest, a lot of players, a lot of big changes that are happening right underneath the cover, right? That is easy at times to forget, to just miss, right? Because it's actually going behind the scenes. And here we are joined today by Ran of RWA Network and Paweł Łaskarzewski of Nomad Fulcrum to talk about the DeFi fusion where RWAs meet decentralized finance, because it's all kind of like coming all together in a package. And speaking of growth of DeFi, let's take a look at this actual quick cheat sheet right here, because DeFi comes all together with the tokenization, and there is this massive 16 trillion projection by the 2030 that we basically continue to grow within. And it's not only the equity, it's also the investment funds, the bonds, the home ownership right there that could be tokenized, that could be subject of tokenization. And well, it seems that there is more and more going on behind the scenes. So what do we make out of this entire growth? Is this something that we recognize? Is it something that has been going on very vocal from your perspective? Ran, what would you say?
Well, this is projected for just on the RWA front, right? I think there's a lot of innovation there. I'm just looking at RWA.xyz, and there's tremendous growth. It seems almost 13 billion RWA on-chain assets, which is a lot higher than the last time I looked. Overall, DeFi as a whole, like crypto assets, is also growing in terms of users and on-chain transactions and such. I mean, we're very much in the DeFi space with Orderly, and like I see a very big opportunity in the interchange of like crypto assets and traditional assets in the same platform, especially for perpetuals, and also like more and more tokenization of RWAs, just leveraging blockchain technology for settlements and trading and bookkeeping.
Right on. And Paweł, what would you make of this entire growth projection? Is this something that is actually possible of being reached at that time by 2030, which is basically less than six years from now? Is it possible to break all those kind of like internet bubble, the .com era, this massive growth of telecommunication?
Yes, definitely. I believe it's possible because it's enough to see who is joining the space today. Like the biggest ones, BlackRock, JP, CT, Santander, like everyone from the big financial companies, they are joining. They are exploring the space of RWAs and tokenization. So given the fact that they do this, and the main business of theirs is to get the transaction fees from every transaction. So blockchain is a perfect fit for them because with tradability 24/7, with fractionalization, they can try to monetize a new capital that they were never monetizing before. So just one simple example, today we can buy stocks from 9 to 5 from Monday to Friday. So with transactionability and tradability 24/7, immediately they will have much more additional period of time where they can monetize and capitalize on the transactions that are happening. With fractionalization of the assets, they can put liquidity into the assets that have been illiquid before, like Berkshire Hathaway Series A stock that costs $700,000 or $800,000 per one unit, which is today not possible. There is zero liquidity. Or into buildings like commercial real estates. This is also something that today you cannot trade. You need to have one fund that will go there, buy the building for 400 million, and that's it. That's the transaction you can have. But you cannot distribute this amongst the users. And new super interesting products are going to be created on top of that. And it's enough to check the size of the capital markets worldwide today. The capital markets are bigger, like couple of levels of magnitude, than the whole market itself, the spot market. So only those things are showing that those projections are super possible, and I believe we will get into there maybe 2030, maybe a little bit earlier, maybe a little bit later, but definitely those numbers are going to be hit.
Interesting. So don't we think that in the core concept, decentralized finance overall, right, that it all connects so well with the tokenized RWAs, all in all, that there is a little bit more basically headwinds instead of the tailwinds going on with the MiCA regulations, going on with so much of the quote unquote centralization coming in, right? We are still, obviously we have big players like BlackRock and all those Vanguards and Dark Investments. Those big players are basically starting to walk our ways, right? And some people see it as an option. The other people see it as threat because of the risk of crypto becoming too centralized, crypto becoming too much owned by one entity and not another. So what's your take on it? What's your look? What's your experience, Ran, from the perspective of our Daily Network as a DeFi project? Like, do you see it more as solving the problem of making DeFi more accessible to the people, or more power to the people? Like, what's your POV on that front?
Yep. So Orderly, our mission is to allow anyone to trade anything from anywhere. So hence, like permissionless listing, permissionless liquidity provision, like these are features that we're working towards, and the accessibility through any blockchain. And we're live on 7, going to be 8 very soon, and through like any front end, like allowing the building of a front end for an exchange much easier than CeFi or TradFi. And that's kind of the whole beauty of DeFi, in that liquidity and yields can be shared and aggregated, and it's much easier to just build a product on top for a specific user in different regions. And then also the asset listing and liquidity creation process, right? So that's DeFi. So then we're meant to be infrastructure for all types of players, whether they're retail or institutional, like you said. So I think the institutionalization of everything is definitely a big positive step towards the whole industry as it becomes more mainstream, right? So regulations from the US, EU, MiCA, like you mentioned, the large crypto nations, and then the players like BlackRock, as you mentioned, it's a positive step. I think the lines between crypto players and traditional players are getting more and more blurry, as well as the things that they operate in, like traditional assets, hence RWAs. So they're experts, like the investment banks and BlackRock are the experts in dealing with traditional assets, right? That they've done so for so many years, and they have the licenses and the network and the infrastructure to tokenize them and to offer them as part of like portfolio options, and in a similar way in how they take crypto and then they make it more traditional via ETFs and such, right? So I think it's similar in that, and it becomes like different conduits of like bridging the liquidity. So it's like as RWA assets, there's more and more, and there's more issuers, and there's more TVL. I can certainly imagine the trading of that, the investment that becomes commingled with some of the DeFi infrastructure that we see that allows like more seamless access. Although there's going to be compliance restrictions depending on assets and regions, but it just allows for like the search for liquidity and yields to be much easier and then more accessible to all types of people, right? When they fully embrace just using the crypto infrastructure and just like the audits and the bookkeeping and the delivery of dividends and the shares and like fractionalization, as mentioned, like it becomes so much easier for everyone.
Yeah, I'm with you on that note. And while we have you there, Ran, on that merit, while we introduce, like I said, to the broader audience, the one that is yet to come, that is one that is yet to catch up with all the institutions basically getting logged in to crypto. You mentioned a very interesting point about, well, the safety, right? Tapping up on the safety, because one of the main premises and observations is that most of the people are risk averse. We hate losing. We hate taking up the risk. We even kind of like are more than happy to trade comfort for any wins. And that actually translates to a lot of people not really seeing enough of stability in DeFi, enough of trust in DeFi at times, because we keep seeing all those cases where people trade, basically make a trade or just make a transaction, send a DeFi transaction, and and they pay $700,000 in fees in Ethereum, for instance, because of not adjusting the toggle, right? We keep hearing basically all the stories about the decentralized finance scams and schemes going on. So can we really say from your perspective, Ran, from the perspective of what you've accomplished with Orderly Network, that DeFi is safe?
I was okay. So I think there are many different issues with DeFi, from safety, like you mentioned, to just general usability. The barrier to DeFi is high for the average user, even for like CeFi users, crypto users. Jumping from like Binance to DeFi is not that easy, and for more traditional, like let's say Robinhood users, it's a lot more difficult, right? And these are things that need to be solved for, and which we're actively trying to solve for. Things like abstracting away chains, abstracting away wallets, accounts, using like biometric logins, passkeys, just to make it all very easy, and have warnings potentially on some of the safety issues that these are issues that wallets are trying to solve for. The whole space needs to be the experience needs to get a lot better and more user friendly for like the average person, right? Which plenty of people are working on. So I don't see that as an impediment. I think it's still like there's still going to be risk, but it'll gradually decrease over time as more trust is built to like the larger players. I mean, you don't really hear many issues about like Uniswap anymore, right? It's been attacked probably many times by hackers, and it's generally trusted. I think just in general, still DeFi does decrease the trust barrier by a lot, even at its current state, in that people more or less trust the code versus like human centralized players. And you can see that with like new protocols, like no-name protocols launch and getting a ton of TVL or chains, right? In that people are looking at the code and they trust that. Otherwise, you would never get that quick of an adoption in DeFi.
Mm-hmm. True. And that actually takes me to another point, right? Because the safety itself, well, safety is important. Like I said, many people, traders, portfolio managers are gonna subconsciously want to trade, basically comfort for safety, or safety, I should say, for even just not facing the losses, right there. And here we are basically with a massive investor sentiment, kind of like a game going on. The individual investor versus the corporate investors, right? The entire banking sector that could be so arranged with DeFi right there. Paweł, what's your stance? What's your experience on the current state of the DeFi in terms of the sentiment towards it, both on the individual and investor side and the corporate side?
So on the individual investor right now, they are holding because they get into the space when the market is going up, and we are when we are on the end of the bull market, usually on the end of the cycle. But from the corporate and institutions, I see a super big positive sentiment. They are a little bit cautious. They are a little bit afraid. The new regulatory changes are coming in, so they don't know what's going to happen because there are those regulatory fluctuations that they are afraid a little bit, but they are exploring. And usually those big organizations are not building a thing by themselves. Usually they do M&As or outsourcing. So they are looking right now for acquisition targets that can buy and integrate with the current operations to be able to have exposition to the crypto, to the DeFi, and to the RWA market. And you can see how many transactions has been made by JP Morgan, BlackRock, Citi, Santander, and all the big guys in the space, because they started to getting into the space through the capital they had access to. Because building the thing in such a large organization, building a startup from the scratch, incubating the startups within the corporate structures, it's super tough usually. But there are some institutions that are operating a little bit different, like Santander. So we know that Santander in 2021 released corporate bonds on Ethereum, on the public blockchain, as a test worth 20 million euros, and they did it with a success. We know that Visa, since 2019, were experimenting with settlements under the hood on the USDC, on Ethereum, and on 2021 they introduced that mechanism behind to settle transactions faster between the sites. So this kind of DeFi approach is being used by some players. They are building those incubators within the organization to start using those DeFi solutions and RWA and tokenization. And we see BlackRock with Build Fund. So Build Fund of BlackRock is basically tokenization of the T-bills, and the whole Ondo Finance has been built on top of that. And they provided an on-chain product, and a product that is basically tokenizing the treasuries, U.S. treasuries. So that shows that a lot of those players, they experiment, they buy, they get into, but they are still very cautious. So it's a very good momentum for the organizations like ours, like yours, to get into, because after all, in the future, those big organizations, those big corporates and institutions are going to look for partners to get into the space, to work with them on chain, and we might be the answer to their questions. So definitely, I'm super positive on that.
Right, I'm really curious, right? Because managing from the perspective of orderly network, and I fully align, by the way, with the vision. That's a very good vision you have there to make trading accessible for everybody everywhere. What I'm thinking is basically there's a lot of headwinds, just like I mentioned, right? And from your perspective, are there any particular latest trends that you pay attention the most, basically lately?
Relative to RWAs, like headwinds, as in like regulations, or
well,
or
that's a
just
very good
players?
question, right? That's probably whatever we name as the headwind is that there's tailwinds. Yes, true. That the regulation being one of the headwinds, the sentiment being the second, the another one. The entire, just like I said, just schemability, if you will, let's name it this way, for a lot of bad
Yeah.
actors in the space. But all in all, there must be some ways around, and those ways around tend to form certain trends and tendencies. Do you see any lately?
Right. We do see the interest in RWAs pick up, right? Especially as like interest-bearing collateral. Because for perps product that we currently have, I mean, we take like native stable coins from different chains, and there's definitely interest to have yield generating assets as collateral, right? So like T-bill type of, there's multiple players that offer that with various restrictions. There's those are more like appealing to the average person who wants to just hold collateral on perps. They want yields and still trade, right? So there's pickup in that. There's even a pickup in interest for other assets to be like RWA assets to be traded, right? Like FX. I mean, before the Japanese yen was quite volatile, and more recently, with the Chinese easing, the Chinese A shares is like gone up like a ton in volatility. So there's been interest in like those types of assets being listed as a search for volatility, right? Especially more like non-correlated volatility and this is a need by more sophisticated players like traders and asset managers, which are coming into this market, right? They're seeking like non-correlated alphas, bets. And crypto is very correlated in general, right? Crypto assets. So then it's a way for them to potentially diversify their holdings in a 24/7 type of market, because stocks, I mean, they have closing times in TradFi. So
So
these
how
are
can
these
we?
are yeah.
Yeah, please go ahead.
Yeah, I mean, so like it's again the mixture of like traditional and crypto assets in the same. I think that's where the world is going, to be honest, right? It should be a permissionless way of having all the assets, doesn't matter what it is, and even prediction markets on one liquidity protocol, which is what we're trying to build. And then there's applications on top of that that caters to if they're like TradFi traders, and then that needs like a license, or just pure crypto like add-on projects, or like a mix, or like prediction markets. But the liquidity sourcing and contribution should happen in one big pool, right? Which is kind of what we're doing.
Got it. So one quick point, Pavel, from your perspective,
Mhm.
how can we make it all more accessible, more plausible from the institutions into offering to the regular people, to the regular citizens who just want to get something good, safe, potentially cheap? Is that anyhow accessible, possible of achieving from the institution side?
So I will also tackle to answer that. I will tackle also the previous question you asked about the risk of centralization. So like just stablecoins are centralized solutions, and right now the capitalization of stablecoins is $174 billion in crypto. So and they are super easily used. Basically, stablecoins are providing traditional market liquidity on chain. So I think that the way to make it easier is to allow the capital to flow into the crypto, into the blockchain. Because with more capital in here, we will have bigger adoption, and everyone will start thinking about the solutions that are more that have better user experience. Because today the thing that we struggle the most in the blockchain is user experience. Like for example, my mother, if she would want to get into the crypto, that would be nightmare for her. And that was actually because I tried to convince her one time, and I was telling her about the gas fees, and that gas fee is high, and she said, okay, is the gas is high because Putin is not selling gas to Europe or what? That's the problem. We are using very complex terms in crypto. Instead of transaction fee, we are using gas fee, etc., etc. So we need to get into the shoes of the average person from the Web2 market to bring them Web2 solutions. That's why in the Web2, Web3 gaming, we have only like 7 million players who are actually speculators, and on traditional market, we have 3 billion. So if you are building a game in Web3, you should tackle the 3 billion market, not 7 million market, right? So that's what we should think of. And that's why right now we see this big new narrative that is covering everything in the crypto, which is a Web 2.5, which is like combination of those two markets. So there is a blockchain use underneath, but the user experience of the solution is like you don't need to know anything about crypto. And given the fact, I gave the example of Visa. Like you pay with Visa. Do you know that Visa is using blockchain underneath? You don't care. You just pay as you used to pay in the past. But settlements behind and the speed of network is increased because of Visa. So that's the future, and that's how we can make it easier for everyone, from the retail through the SMEs, ending on the institutions.
Let's take a look at another piece that we have right here, right? In terms of the market size by the region itself, right? 68 trillion for the entire RWA's real world assets market size by 2030. That's quite a number. 30x growth, basically 2023, right there. 10% of global GDP by 2030. 18.9% compound annual growth rate. Well, those are big numbers. And one of the largest seems to be obviously North America right there, although Asia is gaining a lot of market share, is capturing a lot of attention for many good reasons, such as the LATAM and Middle East right there. So what do we make out of all those numbers, right? How do we fit RWAs in the DeFi ecosystem right now? Where are we on this map? What would you say, Paweł?
So we are just starting, I would say, because we have seen the first regulatory changes this year. MiCA in Europe was one of the very first regulatory regulations that have been implemented, that is trying to fit those numbers into the frame of some kind of law. And regulations that are going to be implemented in US, Asia, different regions over the time will help us to get into the tokenization and RWA market. Why? Because imagine the very simple thing that everyone is trying to do in crypto, which is super tough, and in the same time, it's super easy to understand. It's tokenization of the real estate. You have a building, you want to tokenize and do fractional ownership of the building. The problem is that usually, if you want to have the owner of the building, you need to go to the notary and have it in the public registry, the person registered. And usually you have some limitations. For example, amount of people that can be in the registry, the owner of such a building. And then you have a lot of headache, because this part of the Web2 world is not anyhow prepared for those new changes that are happening on the RWA market. So that's why, on top of that, we need some regulatory changes that are going to allow us to have register, not on the paper, in the basement, on some kind of building in the small village on the north of some small country, but on the public blockchain and registry. And this is going to be the same registry as it used to be before, and it's going to be agreed that we can rely on that in the same way as we relied before. So those kind of things are necessary to allow those numbers to be met. And right now we see a huge worldwide regulatory push towards that direction. So in US, everyone is speaking about new regulations. We see the big players that are joining in the space. In Europe, we already have the first part of MiCA that have been implemented. By the end of that year, we will have another one. And in the following years, the next iterations of such regulations will appear. In Asia, those kind of regulations are being tested. They are being implemented and validated. In Korea only, you have the market that is very regulated right now, and they're thinking ahead of a lot of different countries and trying to implement those laws. In the Middle East, the same, etc. So those things are going to push those numbers up and will allow everyone that is joining the space with the interesting project that is doing something around RWAs to contribute to those numbers. But without regulatory changes, we're gonna have hands tied with the rope, or we will still drive on the first gear, not on the sixth one.
Yeah, Ron, question for you real quick, right? Because the compatibility right now these days on the growth chart that we showed before, we seem to be quite early just yet, right? How do we actually fit the RWAs into the current DeFi ecosystem? Is it possible, or there are some blockages basically that we cannot eliminate just yet?
I think there's already quite a few players tackling this. I mean, the one with the best product market fit is stablecoins, right? Obviously, if I'm looking at, there's 124 million stablecoin holders, and that's like the easiest, and that's RWA on its own. And then while rates were high, we had the T-bills and these interest rate bearing that was earning higher than Aave, right? That got a lot of adoption from crypto holders. I think these are very natural product market fits that came about, and now there's all types of like private credit, even commodities, all types of these. I think I mean, it's all happening. I think like we're seeing it in, again, the interest bearing collateral and the the interest in trading traditional assets through perpetuals, although on higher leverage, right, by the crypto guys. So I think it's kind of a matter of time before it all gets merged. I think a big thing is actually compliance, right? We deal with institutional traders ourselves. One of our investors is Laser Digital, which is wholly owned by Nomura Securities, one of the larger investment banks in the world. And throughout, the due diligence process with these guys, they care about because of the permissionlessness of DeFi. I mean, like true DeFi, call it. There's various ways for kind of dirty capital to get into pools, right? And then there needs to be constant monitoring of that. Potentially whitelisted addresses or blacklisted addresses that are not allowed to interact with the protocol, or those addresses are like those lists are controlled by like regulatory bodies that they can dictate these things, because there's always some sort of threshold that of these types of funds going into certain pools that makes it impossible for institutional traders to trade, because they need to know their counterparty is legitimate and not like from North Korea or something, right? So I think that's one of the biggest hurdles, I'd say, for because institutions are actually less sensitive to the user friendliness of the UIs of DeFi. They care about liquidity, they care about transparency, they care about safety, like security, and they care about compliance. They care about those are the things that they care about, right? So I think solving for these things, I think liquidity gets solved. It's just a matter of time, and then it's the compliance that's a huge thing that people need to really tackle. That gets them in, because on Binance or Bybit, and now everyone's KYC'd, so they feel comfortable trading there, because presumably there's no one there that like the FBI is after, right, on that platform. So that's not the case with DeFi. So I think that's a huge hurdle. That's probably the biggest hurdle I see, actually.
Yeah, I mean, quite a counterintuitive kind of like a point when you think about that, right? That the banks, for instance, those big centralized institutions that actually should put first and foremost the client in the center, right? Actually, just take a lead more on the regulatory aspects and just making sure that everything is compliant, obviously, in terms of their offering. While in reality, those users, myself being one of them, I come into the banking, I log into whatever bank, not naming the names, and there's UI, basically UX from like 10, 15 years ago, right? And there's nothing, it looks nothing like what it is right these days. And there's lack of compatibility across all the fronts. So on one hand, there is this big adoption, right? On another hand, there is actual just those headwinds, just like I said, just one of them, not making it so much accessible and so easy to use to a lot of users that come and deal on a daily basis with Apple, with Microsoft, with all those big companies, corporate clients, that just beat them to quite an extent. And all my main concern, just to kind of like hear your final thoughts, gentlemen, on that, Rand and Pavel, is aren't we kind of like aren't we getting too centralized to an extent that we stop caring about the accessibility of those users as a whole industry, right? And that we start caring most about the compliance. Just on the note, just like you mentioned, Ran, for Binance, for Bybit, for all those big players, isn't it the case that we are starting to care and follow this path of those big corporate institutions that actually forget about the clients and just focus on compliance only? And isn't it the same case a little bit right now these days? What would you say, Pavel?
So that's why you need startups. That's why you need to you need to have those lean companies that are in the space, that are small, that care about the retail customer. Because then, by providing solution by those companies, you can start approaching also in a very good way the retail customers. As you said, you have this old banking legacy systems that is super tough to use, like that looks like from the 90s, etc. But then someone created Revolut, someone created a bunch of the other fintechs and Robinhood, etc. And suddenly it becomes like in the app, and you don't need the big bank account or something. You can do onboarding with a selfie video. That's it. You don't need to move from your house to go into the branch of the bank to do this. And then all the big banks started to follow because they started to lose the clients. Or they started to do M&As and buying those organizations and to have a arm for younger people or something. So that kind of way was always on the market, on the traditional market, and it's going to be, in my opinion, very similar in the blockchain. So we'll have big organizations that will follow what are doing the smaller ones, more lean, etc. They will do M&As on them, as I was referring at the very beginning. They will outsource some operations to them, and they will use those kind of solutions as much more better user experience for the end retail customers. And at the end, after all, they will get into the same place. And today, in every bank in Poland or in Europe, on most of those, you can create an account online. And 10 years ago, it was not possible, and only a few players were able to provide such a solution, and that was super innovative. And today, it's a standard. So, in my opinion, that's why you need us.
Oh yeah, Ran, what would you be a final takeaway for everybody, kind of like trying to not get burnt early, right? Because of the UX UI that is still very difficult and inaccessible to a lot of Web 2 people, right? Just like I said, leading very often to those mistaken transactions of high end. What would you say is the main kind of like a solution to it before we wrap the show?
I actually don't see it as being becoming more centralized. I think the pie is growing, right? So then I can imagine a world where you have these permissionless protocols that facilitate exchange and lending, kind of like Uniswap, Aave, these types of, and like truly the governance and the stakeholders are potentially, it could be from retail to the institutions that are partaking. right? But they're using these infrastructure and even like permission, like let's say KYC standards that can be applied to chains or whitelists or protocols. And that's, so like for us, we're trying to be this permissionless protocol that allows anything to list, anyone to contribute liquidity and accessible from anywhere, any chain. And that's meant to be, that's meant to be like Ethereum, right? So then that like should not be regulated theoretically. And that's the same as the internet, right? Like the protocols are not regulated. But then the front ends who leverage that for liquidity, for yields, that gets regulated depending on different geographies. Like ideally, I think that's the kind of setup. So then you have people who really build the protocols that people use and that has network effects. And then these front ends that, US, like Europe and institutional, and they all look different, right? And they all have different restrictions. But creating these things can be very, very easy. And that just dramatically lowers the barrier to entry to create these products, right? That you don't have to be like a Goldman, like a JP Morgan to do it. And that's where kind of all the new companies and the startups can partake in, and you have much better products potentially for the user, right? The whole thing evolves into just having better products for the users that anyone can build. I think that would be a really good future, in my opinion.
Right on. I fully subscribe to this vision myself. In my opinion, that's what it's going to look like, right? Web 2.5 just yet. However, it seems that the trend is growing, that there's tendency upward lifting for anybody holding a stake in this industry. This seems to be quite a positive stake to hold. And ladies and gentlemen, we've discussed with our today's guest, Rana for the Network and Paweł Łaskarzewski, quite a few points, right? Not only the tapping upon the DeFi fusion, where RWAs meet decentralized finance, tapping upon the overview of where we are on the DeFi side against the actual projections by the 2030 for the entire RWAs, on the tokenized side and on the real side. We tapped upon the sentiment, both of the investor and the corporate, and how the regular users are yet to catch up. And well, there are so many other points, and some of those points we're going to actually discuss on the next episode of the series for Invest Like a Pro, with the strategies of the tokenized assets. And I've been joined today by true legends and Rana of Orderly Network, Paweł Łaskarzewski of Nomad Fulcrum. Gentlemen, it's been a pleasure taking your time, taking your big brains. Thank you so much for sharing your wealth of knowledge with our today's audience.
Thank you.
Thank you.
Thank you so much. I've been your host, Adrian Zdunczyk, CMT Charter Market Technician. Let's hear you on the next episode. God bless.